Guys, alright, welcome everybody. In today's video I will show you exactly how you can beat the market with these stable strategies, and more importantly how you can position yourself and register and begin to trade for banks. You can actually trade for banks if you're a good trader, and then of course you're doing fine, you're not doing too bad. You can get that tax deal being done, and of course make small amounts of millions of money from yourself you get paid, and of course like that based on negotiations that you guys have. Now these are the things you need to put in place, and these are the things you should follow me to. So if you're just watching this video for the very first time, I want you to be calm and watch this to the end so you can learn this exactly and how you can get yourself started on this part. And more importantly, if you're just watching it for the very first time, please subscribe to the channel, and then of course you can learn much more of software of this value that we drop on this channel. Thank you, and let's dive into it, guys. Once again, welcome everyone. I put in here in my presentation institutional trading, how to beat the market, simple strategy. Of course, you should all know that for us, you should begin from institutions where we have the likes of World Banks, Nations Banks, and the likes, JP Morgan and all the likes. Those are the people who trade for us for the financial market. Then, of course, that was a couple of millions of years ago. And then due to the advent of technology and other stuffs, we begin to have a further breakdown of this institution trading into retail and the likes like that every one of you now can now access. Myself and you can now access the market individually as a retail, and of course be able to deal with financial global market. Due to the advent of technology and many other stuff like that has made it possible for every one of us to do. And of course, and I still should tell, even though you have $1 million, you're still a retail trader. Of course, you should know what it means to be an institutional trader or trading for such. It's a huge amount of money, crazy funds, not just anyhow funds, crazy funds. So that is on that. So of course, so you have to know something before we go into that first. So those are the things I want you to know. That is for that. So let's go into the slide and let's see what we have to learn for today. Awesome. So number one I have on this my slide here is called what? Market open strategies. Also, you should note that if you want to start trading as an institution, you want to start institutional trading, you want to trade like the banks, how exactly the banks trade, how exactly these big organizations trade, and of course engage their stuff. You should know for sure this number one thing that I call the market open strategy. This strategy is a thing that everyone should know and should be aware of, because it will definitely skyrocket your trading, position you much better, just like all the other institutional banks, traders, and the likes like that. All right. So what do I mean by market open strategy? Okay, good. Now you should know that today is Monday, and then of course market open across the world globally on Sundays. According to our time here in GMT +1 is just about around 11 p.m. I think in the US is about 6 p.m. in the evening. So it varies in times and of course in regions. However, it opens on Sundays evening. So one thing you should always know if you want to start trading as an institution is that every market opens does not accompany with many traders. For example, just like someone going to the market and in the morning, of course you cannot see all traders. Those who, for example, you want to buy a pair of shoes and you went as early as in the morning or as early as 6 a.m. or 5 in the morning, where it's about the new dawn is just coming up. Of course, you definitely see people that would have resumed, or people that even slept over, or people that don't even go house, or do they have houses, they can always put their head and sleep. That is where they sleep. Of course, you see people that are still selling stuffs. But would you be compared to you going to the market around noon or afternoon, or where everybody's settled down, everybody's about to exhibit their products and that stuff like that? It will be a choices of varieties for you to make your selection, of course. So unlike going early, you have limited selections and limited ways you restricted to limited stuff that you want to do. Am I talking to someone? So the same thing happens to the market as well. Market opening, there is to be a high bid. It's not always advisable as an institutional trader or someone that want to trade for the banks to trade when markets opening. If you want to start trading for the banks, you should know, because banks do not trade, do not put in their liquidity when market opens. They get prepared, they get ready for it, but they don't launch. That's why it sees as most times your bid or your ask is always high. It's always high because of what? There are limited people who are just in the market yet. People are not yet full in the market, and every brokers, they will always charge you high for that. Most times, just see that those commissions are so exorbitant, are so on the high side because of what? This is because of the market opening strategy. This is the thing, number one thing you should know if you want to trade for banks or institutions, that you do not trade when market opens. You wait till the structures forms. Mostly, more importantly, it's always advisable after the opening of the market section, at least for wait a 2 to 3 sessional time. Perhaps market open during, market open during Asian or during Sydney. You have to wait for at least 2 or 3 more sessions of the trade of the market before you can begin to say, okay, let me begin to look up for my setup and all stuff like that, because it will help you more. I might talk to someone, or more preferable the next day of London section and all stuff like that. You'll be fine. Am I talking? So that is number one. If you want to become a strategist, a international trader, and want to beat the market, so one thing you should always notice that. Firstly, that's one. Secondly, it's called spread, bid and ask. Good. This is if you want to become an institutional trader, you want to beat the market at all time, you want to always win and get yourself positioned to be able to trade for banks and institutions like that. You must be conscious, and you must put in cognizance what we call bid and ask. That is what we call spread. Your commissions that the brokers you engage charges you. Now, if you want to, sometimes you always check that if you want to trade some pairs during that sessional period. Aside from this sessional period, during the main market flowing, it's moving so fast, everything is just going fine, everything. You see that their commissions, that their bid and ask will be so low. Do you always notice? Go to your MT4, guys. Maybe I will show you a practical time. Go to your MT4 and let's notice some of these stuffs. Sometimes you bid in or ask for your GBPUSD. You see that your commission will be so low. You see the commissions, the spread, the raw spread will be so low. Why? Sometimes you just see that the spread or the ask or the bid is so on the high side. Why? Because of what? Because of what we call spread. Because of what we call the time at interval at which you are trading such pair. So I do say this often and often to our students: do not trade any pair that is not at their sessional period, sessional time. What do I mean? For example, I want to trade Asian. I would definitely be looking out for JPY pairs, and perhaps any Sydney AUD and other stuff like that. I would definitely be looking out for them. Most of what I want to trade Asian, and I know that those moments are when they are active and their market. I might talk to somebody. So this kind of stuff happens because of what? It's just a simple analogy. For example, you come in, you want to buy something. I sell stuffs for 15 naira. Okay, and I have 2 people to come, or 4 people to come for the day. If I sell 15 naira for them, I'll make 200 naira. Now, that is 200 naira per day. Now, out of that 200, and I see 20 people that came for that day, I can actually use the money to 5 naira. Or I can actually use the money to a beta. Sorry, let me speak in dollars, sorry. I sell stuff for $50, and I have just 4 people to come. I could take that for $200. That's 4 people for a day. Good. Then if I actually have 10 people, okay, let me say 8 people actually. 8 people, and I sell each of them for $5, $50, that is for $200. If I have access to 8 people to come in a day, I can actually sell $250 or $200. I will make much more. Remember, because of what? We have more of our demands. We have more of demands than we supply. So if I would reduce the money, I will still make much more, and the profit will still not be cut short. The profit will still remain the same as it were. Good. But however, if I now, instead of me to have 4 people for the $250 and I have just 2, I will have to charge 100 for 2 of them so I can make my money. That's exactly what happens on spread and ask and bid. Because of what, sometimes when you come to the market, that moment you come, there are not people with much liquidity. That pair does not have liquidity. They will charge you high so they can break even themselves. They can be at equilibrium at themselves, because no brokers is there to lose. I tell people, every players in the financial market are all making there to make money. As you are there to make money, them too, they are there to make money. Institutions too are there to make money. So someone must lose for us to win. Am I talking to somebody? That is why most of the time, the grassroots, the newbies, the beginners, They are the one that always go be the defeated, be the vulnerable ones, and of course being defeated and faces the losses more, because institutions are experienced traders. Those who have been in the market for a while, they are quite experienced. Brokers, they know how to do the manipulation very well and do their stuff, be at the better side. They know how to position their commissions, everything to their own profitable end. So everybody is just there to ensure that there's a take home for each and every one of them. So there is no one that is there to help you. I tell people that every brokers are there to make their money. Likewise, just you are there to make your money in the market. Everybody is there to make their money. Am I talking to someone? So that's exactly how it works, and it is. So you should be careful. You should notice. You should be very, very conscious of such pair that you want to trade at a sectional period of the market. If you are trading off session, sometimes some person can still take some liquidity grab, do some liquidity grab before they move, and that thing can cut you your stop losses away, or just weak you out, and they begin to prepare a new, and they begin to start its move by the time its sessions begins. You just see yourself being wicked out. Why? Because probably sometimes you entered when it's not a session, and the market will still go and grab liquidity, just do a liquidity grab. Then because it now begin to move. Most things happen a lot for beginners traders and internet traders, because of our students come upon the questions I used to receive, and I tell them. So this is why I'm putting out this, so it can help you. So you want to position yourself to trade for banks, position yourself as property trader, and also you must be careful and be conscious. All these stuff, you must note them very, very well. That is for that, guys. And also the next one is market close strategy. Good. Market close strategy. Market close are just similar to the market opening. Once market closes, if market is about to close, sometimes even before the closure, 2 to 3 hours before the closure, you just see market will just dropped. Or even as a result of this, some traders don't even trade on Fridays because of the slow in momentum, the liquidity, everything, because everybody is ramping up for the week. Even institutions are beginning to round up their funds in the market. They begin to round up, trade it up, and get a position for the next week. There begin to be a reduction in the liquidity, in the volume of the market, in the momentum, in everything. Those who are pumping money on Monday, they don't get pump money like that. Such strategies that people use to reduce their follow-up. You are able to take some people are swing trader for the week, they are able to take their profits. So stuff like that will actually affect, and you should be able to know when market closes and when market reduces its liquidity and momentum. Most of the times when market is about to close on Friday. So these are the things you should note and be aware of. So those things will actually affect if any pair you're taking, if you're not cognizant of them. Am I talking to someone? So these are the strategies that will help you if you want to position yourself to trade for institutions, banks, and other likes like that. This little key point, this bullet points and nuggets will help you, and of course, skyrocket your trading, whether for banks or institutions, and as it just may be. I hope you learned 1 or 2 things today. Thank you so much for joining, and don't forget to join our community on Telegram. We have a family where we drop amazing signals every blessed day. Crazy, absolutely crazy. Last week we dropped about 24 signals and none of it went wrong. We muted everything. Everything was accurate. That was crazy, guys. At least sometimes we used to have 1 losses, 2 losses, 3. This last week was just so crazy one. So I would want you to be part of it and enjoy. So click the link in my bio or look at the description and join our community, our family on Telegram, so we can be, of course, a profitable trader as well, and enjoy yourself for the week. Thank you so much for joining me once again, and have a wonderful week ahead. Bye for now, guys. Peace out.